Hello guys, welcome to today's session, and we'll be looking at the British Pound USD pair today. So the first thing we're going to be looking at is looking at buy side liquidity and sell side liquidity using previous significant daily highs and lows to be able to get good price swings to the downside for a bearish market. Alright, so we see significant high here being marked, another one, same thing here, and we can see this beautiful price movement to the downside, how it breaks this resistance zone, trades back into it, and then finally drops down right into it. And we can see how it respects the zone right here, drops lower, goes back, respect the zone, goes down a little bit, and we can see this imbalance right here. Why? Because it was closed, the market closed during the weekend and opened, so we can see some sort of what word to use, some sort of irregularities in the candlesticks here. So we see how it respects the zone, and finally a move to the upside. And we can basically see how market is trading with this zone. So we see respected here, goes high, closes below it, opens above it, trades up here. And the main reason why it's doing this is just to fill in this imbalance it created right here. And we can see how it confluences perfectly with an imbalance, resistance zone, and another block right here. So we can see that is what the market was seeking when it went there, but it still respected the zone. How beautiful is that? Then we see a beautiful price movement to the downside, comes back here, respecting the zone, goes back here. So basically, we can see it happening over and over again till it just drops all the way down. All right, and we are seeing a potential move back to the upside, which we'll look at in our subsequent videos. So all these marked red zones are potential sell opportunities right there. Guys, isn't that beautiful? So on the 4-hour chart, we can see and have a better view of what is going on. So looking at it, got to this zone, there's a resistance, consolidates a little, getting that momentum, goes through it with an imbalance, retracements, goes back into that imbalance, there is another block right here, and the market respects that, trades lower, comes to our resistance zone, goes a little bit below it, closes, consolidation, then we see a retracement back to fill in that imbalance that the market created on the 4-hour time frame. And we can see how it confluences perfectly with imbalance, other block, and it hits it perfectly, drops down, gains in our momentum. We can see that significant bearish candle to the downside, and we see a retracement goes in, fills it, fair value gap, resistance zone, and then respects that. And on a lower time frame, there is another block right here, and we can see how there's a little bit of price movement to the downside, and we see a retracement. So we can see this over and over again, but we can see that the market is respecting the previous significant daily highs and lows, creating good sell opportunities in this bearish market. So for the sake of this lesson, we'll be looking at Wednesday 16th of October and Thursday 7th of November. So that will be our range to pick out our sell entry. So moving on to the 1 hour time frame, we have a better view of what's going on. We see that imbalance, that strong bearish candle to the downside, closes below it. We can see opens here, trades a little to the downside, and then boom, goes back up, hits that resistance zone. We see that sensitivity right in. It tells you how valid the zone is. Then we see that retracement back in to fill in this imbalance it created. And there are so many opportunities to sell off this imbalance order block here. That is what it was aiming for. So goes a little bit, comes back, and then goes all the way through to fill this imbalance. All right, so all this you see here is the market trying to fill in this imbalance, but that is not always the case. And always take note that the market makers will try to hide the zone from you, try to make you elusive. So there's a lot of consolidation and manipulation in this side of the market, but we can see how the market respects that zone anytime it gets there. A bullish candle to the upside, hits it, comes down, closes a bit. We can see trades above it. We can see how this candle opens high, goes a bit to the upside, comes down, and closes right exactly on that zone. So we can see it respecting the zone over and over and over again. So with our bearish candle to the downside, this imbalance here, it was exactly 6 a.m. during the London session. And since this is a British pound pair, for our entries, you're going to be looking at the London session mainly and not the New York session. Okay, so this is a better view on the 30 minutes time frame. You can see how there's a buy signal right here. That resistance opens, goes down, and we can see it go down a bit, move back up to the upside, closes, opens, that push to the downside, and then we can see reverse back to the upside. That is a bullish signal right here. But we're not going to be looking at scalping opportunities in this market just yet. We'll talk about that in subsequent videos. Alright, so we see that big bullish candle going right through it. So bold and confident just to get a move to the upside to clear up this imbalance zone. So this zone, we see price moving up and down in this zone. So now we can see a retracement back into that zone to fill the imbalance right there. Comes back down. You can see trying to go up a bit, but comes back down because it is done with its responsibility right here. So the main aim of this retracement, we can see, is to fill in this imbalance. So while it has done that, there is no reason for this market to continue buying since we are already in a bearish market. So we can see trade down, moves a little bit, price still consolidates, goes down, creating a liquidity pool right here. The market comes to sweep that liquidity pool. So all this you're just watching, we are not trading yet. Then we see a bearish candle, very bold one to the downside. So what happened here is market came for this liquidity pool, traded up a bit into this fair value gap, gaining enough momentum to move to the downside, and then we see it beautifully to the downside. So now this becomes our point of interest. And why am I saying this? Because we see this confluence perfectly with resistance zone, fair value gap, and there's an order block right here. How beautiful is that? We see about three solid signals for us to enter the market. And this is a very, very good sell opportunity. Aside that, we see how the market respects the zone on the 1 hour time frame. Trades up, tries to go above it, but closes, goes down, closes below that line, creating a very bearish signal, a signal to sell this market. And we see that attempt again but fails, and then we see the market drop here. So now we see that this happens during the London session, 6 a.m. After that 6 a.m. candle closes, we're looking to sell on the 7 a.m. But first, we are looking for that open. We want to see a move to the upside, and then we can be sure that this is likely to be a bearish candle, and we see how market moves straight to the downside, retraces and goes down and hits our take profits after respecting our resistance zone right there. Isn't that beautiful, guys? So this is a 1:2 risk to reward, and I think that is all. So we'll be looking at a live trade from a current market session. Okay, so this is a live trading session. The market is still live, so we are looking at the Euro USD pair, and we can see a similar situation going on here with this pair. So we're going to mark our significant highs, and this is on the 30 minutes time frame. What I want you to understand is what I just taught you doesn't only work on the daily, but it works on all time frames. So you see those examples even on the 1 minute charts, the 15, the 30 minutes, the 1 hour, 4 hour, and so on. So looking at this example, we can see market obtained significant high here, a retracement, goes back, hits the other block, and we see it go back under this resistance level. So at this point, our eyes are not really able to see that it is going in a sell direction. So even when it breaks this resistance zone, we are still bullish, or I am still bullish in this zone. But when it then breaks through this resistance zone and trades through, then that is when I begin to see, the signals are showing right here, because we can see that attempt to break it, and we just see it wick. Same thing here, wick after wick. It just goes like John Wick, actually. Funny. So we see it that resistance zone holds very firmly. So that is where we are going to be looking at to get our sells, right? So this is a 30 minutes time frame. So we see that retracement, break structure, still trades. We are still bullish in this market, but after it goes through this resistance zone, and we see that attempt to go higher but fails here, and it comes back, that is a sell for me. And you can even use the London session or the New York session. It should be from this range all the way here, right? And you still get an opportunity to sell, and it comes, we can even see hits this resistance zone with a double bottom on a very lower time frame, and then goes back up. You can see how it's respecting the zones right here. It goes, we see how it hits, trades back up, closes, and we see that closing just through that zone. But we see how it opens and goes back, retraces to fill in all this imbalances in the market, and then the market just keeps going down and down. So assuming we took the sell, which I didn't take because I didn't see this initially, we'll be looking for 1:2 risk to reward. Yep, and it goes right through it, and we get our profit in. We're out of this market. I'd like to see how this market unfolds, but if there's any updates and any trades I'll take, I'll do what to upload it, and we'll discuss it on our YouTube channel. Alright guys, that is all for today, and I'm hoping to hear from you in the comment section. Until our next lesson, see you soon.